Sector spotlight so we can digest which sectors are actually holding up better, if any at all, right now. So we want to go to retail first. Had a slew of pretty solid retail earnings last week, especially solid guidance going into the rest of the year. How is the index holding up?
Well, I just looked at the indice, and this indice is actually off the lows. Home Depot had a great report and looks good. Walmart looks a little bit better. If you look at the RTH, you will see, this has held higher. Here is the pivot low that was put in place, and look where we are holding higher versus that low, where I just showed you the spiders was at that low. So a little relative strength here. So retail is one to look at. If you take a quick look at Home Depot, you'll see that this is holding higher. As long as it stays above this area, I think some momentum could come to the upside. One of those tier 1 longs if you want to do it on a macro basis, or if you even look at Walmart, maybe everyone's starting to get a little frugal. They're going to, shop for cheaper items, maybe a little bit more bulk. And this too is holding higher. So those two names within retail are holding this up. Because some of the higher end retail, like you saw A&F get sold off, Lulu actually came all the way down to the 200-day. You have to notice when there's a bit of a shift.
But we also looked at Costco before the show started and didn't have the same kind of setup as a Walmart or an HD, just something to notice.
Maybe everyone doesn't have room in their house for super storage. But you look at quick, Costco, it also looks okay. Has a lower type wedge here. It's off these lows where a lot of stocks are at these lows. So it looks okay, but you don't need to be in all three. Just choose one.
All right, really quick, let's go to the ones that aren't working but at all. And then that we have to start with the semis. I was talking to Jim Cramer yesterday, and he was saying that on any kind of rallies that we see, he'd be offloading the semis for sure. Would you agree technically?
Technically, they're on their lows. They're not showing any relative strength. They're just like the market. If you look here, these are actually below this pivot low. Below it means relative weakness. We don't want any relative weakness in this market. It's still, you have a gap down here. I would stay away from the semis. They have a lot to prove. I would stay away from a lot of longs. So at least you want to be long something that's showing relative strength, not relative weakness like the semis and perhaps the banks.
All right, but let's go to the banks real quick. They really got hit hard yesterday, but now they're seeing a little bit of a bounce. But in particular names, Bank of America and Goldman Sachs. Stay away, short. How do you handle these?
Well, it was interesting at the end of the day. First, two interesting things. Yesterday, Bank of America, when the market was up, was the first thing to go negative. That gave us some clues that we would continue lower. Then, around 3:50, that news about Lloyd Blankfein came out that he was, who did he retain?
He retained the lawyer that defended Enron.
That right there, you were saying.
We were saying, like, I understand you want the best corporate attorney, but that's like a red flag for sure. And obviously, Goldman Sachs is paying for the attorney. That's at least what the Wall Street Journal said, unlike the New York Post, which said that he was paying for it himself. And that is to sort of combat mortgage-backed issue securities problems that we saw in 2008.
So two things important here is, one, if you were prepared at your desk yesterday, like a lot of my community was, as soon as that news hit, we were getting short above 110, and you had a nice $4 or $5 move, and some covered into the close. So for today, if you look at Goldman Sachs, that could be an indicator. It just broke this last level after breaking this support. So it'd be interesting right now. It's up a few dollars pre-market. If it could take back this 110, it'll show you that the banks are that oversold that if you look at this move in Goldman Sachs, all the way from as high as 170 down to 106, on that kind of news, if it could rally, that means that the shorts are in trouble, and perhaps this group could finally get a bit of an oversold bounce.
All right, let's go to the industrial ETF, the XLI. So probably have a little bit of action here today, right? Because we saw a lot of industrial production numbers, manufacturing data come out of China and the Eurozone. Some of them not as terrible as we thought, in particular Germany and China. So I wonder if it's looking at all for some kind of setup.
Well, I looked at the XLI, and this was the group that helped lead us lower, gave us clues that the markets would follow a breakdown. It, too, isn't really showing much relative strength or weakness here. It's actually holding near the lows, just like the S&P. So at this particular point, I would just watch it. It's not giving us any leading or lagging indicator. Just put it on the side.
All right, let's go to the OIHs. I wonder if they're going to make a trade here. We're seeing oil rally today.
This group is also below that pivot, which is interesting. So it's lagging, showing relative weakness, where this is actually below the pivot. So to me, it's very oversold, but it is a laggard group as of now. Perhaps it gets a bounce back up to the 127 area, or maybe it steamrolls it. But at this point, this is a lagging group versus a leading group.
All right, let's wrap it up then with the sectors with GLD and SLV, silver and gold. We got to talk about them. So gold hitting, a record over $1,900 an ounce overnight, selling off slightly today. But we were talking again before camera, and I said, $6, $7, $10. Don't we need to see? And you said you need to see like a $40 correction for the rally in the stock market to really have some legs as compared to gold.
Yeah, right now gold is just overbought. We've been up 5 days in a row. My thesis has been to be long gold since like 2008, this year, blah, blah, blah. Anyway, short term, up on the 5th day, you never chase it. You sell some if you're more than a tier 1. And today,
Would you buy the dip though, since we're down $10?
$10 isn't enough.
Okay.
You know, maybe if it pulled into the 10-day moving average like it did, if you look here, you know, a week or so back, you know, this was a pull in to buy. Here you had another extended move, pulled back to the 8-day, it was calculated, that's where you buy it. Here, let's see if it does it again. This is at 178, that would be like a $6 pull in the GLDs. So I would think if gold starts to get below yesterday's low, the GLDs below 181.60, perhaps, you know, the market would take clues that we could test a little bit higher in the equity arena.
And then silver had a breakout but has been lagging gold. So how would you trade that today? It's down, you know, I think 30 cents last time I checked.
Let's see if it holds up better.
Okay.
Since silver's been lagging, you know, people have been, every time gold goes down, they just short silver. At this point, silver's making a little bit of a move to play catch up. So if gold rests and silver pulls in less and shows some demand there, it could have a better move as it resumes its upward trend.
I've heard that from a few other strategists, actually, that the silver will start outperforming gold in the second half. So we will see what happens with that, and we will be right back after this with more stock picks for today.